There's a lot of money printing going on in the US. Now is the time to buy gold. Whenever you have war, it's very inflationary. The governments typically will print more money to pay for the war. People are putting their money into the bank, not into gold and not into real estate. The valuation of the Vietnam stock market, it's priced like the country's in a crisis. That's how low the valuation is. The number of new housing units that are getting produced in Vietnam every year is about half of what the demand is. So that's why the price has been squeezed up. If you're gonna need to live someplace someday and you wanna have kids and all that kind of stuff, yes, absolutely get on the property ladder now. Consumer confidence in Vietnam right now is near an all-time low.
Mine is also fairly low right now.
Right.
But I think medium to long term, still somewhat optimistic.
Oh, very, very optimistic. I mean, the economy is booming.
Good morning, everyone. Welcome to another emergency podcast with Mike. I know it's been, I think, a couple months since we last time had a one-on-one with Mike. He's been a co-host of mine on some past podcasts that you guys have probably saw, including with the CEO of Techcombank, among many others. Today, though, we're back on a one-on-one because a lot of you guys have been asking what's going on in Vietnam's economy at the moment. A lot of different changes, some for the better, some for not so welcome news, but it's important for us to all understand what's going on exactly.
Especially with the stock market.
Especially
How
with the
come my
stock
stocks
market.
are not going up?
Yeah, no, that's a key question. A lot of
Yeah.
people are asking me and trying to figure out from Vietcetera's and Vietnam Innovators' point of view, what's going on, and who better than Mike to have on the program. Mike, good morning and welcome back.
Thank you so much for having me. These are always great experience.
Yeah, fantastic. So you guys probably don't realize this because early in the year, the gains were amazing. I think the headlines all spoke for themselves, but the summer has been really flat, not so hot. And this is despite Vietnam's GDP growth being 8%. So Mike, why is that? Why is the economy so strong on the top line, but the stock market's flat? And are people putting money somewhere else these days? So over to you.
This is a question a lot of people are asking, like, how is it that we have this divergence that the economy is really doing well, but the stock market's basically flat? The short answer is that people are putting their money into the bank, not into gold and not into real estate. Before I kind of tease out what that whole story is about, let me just kind of give a little shout out to my boss, Alex Hamley, who's the CIO of VinaCapital. And he was really helped me and coached me with making sure you get the key messages across when you, in formats like this. So let me paint a sort of overall picture, and then maybe we can jump off into whatever direction you think is interesting. So long story short, the valuation of the Vietnam stock market it's almost as if it's priced like the country's in a crisis. That's how low the valuation is. Why is that? It's really for two reasons. One is that people are putting the money in the bank because the high interest rates. And the other thing what's kind of exacerbating that is that the foreign investors have sold a lot. This year and also the last 2 years. And so those two things have sort of depressed the stock market. But why are the interest rates high? It's because the economy is booming. There's all this infrastructure spending going on. And so that's kind of the overall, to explain why this divergence is happening. Long story short, I think the market will be kind of flattish, more or less, for the rest of this year. And then next year, I think we'll have another big leg up.
Yeah, let's talk about that because a lot of overseas visitors, they come to me being like, oh, it's rocking.
Yeah.
They fly into Tan Son Nhut, they take their taxi to the Park Hyatt and they see everything's great, right? And I think it generally is.
Yeah.
I think compared to the world order at the moment, Vietnam's super hot, but it's very concentrated, the super high gains at least. Manufacturing, logistics, construction, specifically.
Okay. So you're bringing up a great point, which is manufacturing is about a quarter of the economy here. Actually, that's all FDI money. So you have an interesting situation in Vietnam where a big portion of the economy is not actually reflected in the stock market.
Yeah.
And that's really a challenge for our portfolio, everyone's portfolio managers. How do you want to take, so for example, if manufacturing is booming, we would, you'd have a situation in which industrial parks are really doing well. Companies are coming and renting. The logistics and those are things that you can invest in. So it's a little bit tricky to be a PM, and I'm lucky to work with some really great PMs at VinaCapital who are good at navigating all of this.
And so that's on the more business FDI side. makes total sense. I think super hot. Let's keep it up. On the consumer side, let's talk about that for a little bit, Mike, because I actually don't know the split of the money inflows into the stock market. I assume it's 50-50 in terms of
when
FDI,
you say 50-50,
like FDI versus
okay,
retail,
so FDI comes into the economy, but it doesn't come into the stock market.
Oh, are there foreign buyers of the stock market shares though?
Yeah, okay, so now we're getting into the distinction, and sorry to go down the geeky economics rabbit hole, but there's what's called foreign direct investment, and that's when a foreign company sets a factory up here, builds a real estate project, something like that. And there's also what's called FII, foreign indirect investment. And that's when a foreign investor, like Fidelity, for example, buys Vietnamese stocks, buys bonds, something like that. There's an enormous amount of FDI in Vietnam, but actually the FII, I just mentioned that the foreign investors have been selling around $3 billion this year. Maybe since post-COVID, it's over $10 billion that they sold now. So the percentage of the Vietnam stock market that's owned by foreign investors is, I think it's a record low or close to a record low now. It's around 13%.
Okay. And why I bring that up is because the capacity for retail investors to invest in the stock market maybe has kind of gone down a little bit because interest rates at bank deposits have gone up, I think.
So I wouldn't say the capacity. The way I would word it is that they've just found other more interesting places to put their money. What we see in Vietnam is whenever the 12-month deposit rate at the banks is over sort of around 7%-ish, that's the behavioral shift that you tend to see retail investors think, I can lock my money up for a year and now it's around 8-9% at kind of reputable banks. That's when you tend to see them take money out of the stock market and put it into the banks instead. Yeah.
Okay, got it. And so capacity is one thing. I guess you could say investment options have been more interesting elsewhere. What about consumer confidence? Is that because, I was alluding to that, like foreign investors, they see the energy, the dynamism of District 1 and the path from the airport to District 1. But what about the realities on the ground? And we referenced it earlier with the past emergency podcast about, inflation, what the day-to-day consumer activity looks like. Can you comment about that a little bit? What does consumer confidence look like today, mid-August 2026?
Okay, so normally I like to paint a very bright, rosy picture, and thank you for going right to the right to the Achilles heel. Consumer confidence in Vietnam right now is near an all-time low, basically, which is very shocking because the economy is doing well. There's a couple things here. So the first one is I mentioned that the interest rates are high. So there's a stock market story, but there's also a mortgage story. So people that got mortgages, mortgage rates in Vietnam are basically floating rates, 2 to 3 year floating that reset every 2-3 years. What was happening at the beginning of this year, beginning of 2026, is just coincidentally, it happened that there were a lot of people who had bought homes and their mortgages, this is 2-3 years ago, and their mortgages were resetting at the beginning of this year. And not only does, you have this initial teaser rate, and then it reset at a higher, but that was even higher than what they were expecting. So that's one factor. You mentioned inflation. That's a really good point. There's actually some research from Stanford University. It's very interesting that shows this idea that when you have a spike in inflation, it actually tends to impact the sentiment of people more than it impacts their actual spending. And this is a phenomenon in the US.
It happened to me too, because my income generally hasn't changed. The business has, ebbs and flows and that kind of thing. So I think that has affected
you see the sticker
confidence.
shock.
Confidence is separate from capacity.
Because you see the sticker shock, but you still buy it anyhow, So that's another big factor.
Like one confidence that ebbs and flows for me is how much I spend on, let's say, dining.
Right.
Like lately when people suggest, let's say, fine dining, which I'm not even, I don't care for fine dining. I thought
you were a pioneer in Vietnam's fine dining.
Let me put it this way. I really appreciate it every now and then, especially if there's a good story, but I'm not going out once a month.
Right.
Like even once a month is a little bit
Right.
a lot already. Like, but I call it the set menu dining index.
Right.
You know how like the Economist has the burger
Big Mac
Big Mac
index.
index?
Yeah,
It's
right.
like I think Vietnam is like $3 or something,
So
sub $3.
For geeky economists, we look at everything with percentages. So what the Economist magazine would say is that based on the price of the Big Mac in Vietnam or in the US, the value of the Vietnam dong is undervalued by about 25%.
Yeah.
And that which helps our exports, by the way.
I was thinking of like this is a little bougie to say, like almost like the set menu dinner index.
Yeah.
Like what is the mood and consumer confidence? Because
Yeah.
when you say the consumer confidence index, I think it kind of scares away the average Joe because
Right.
what does that mean? It's very economist driven.
Right,
But what are some relatable things? You could say like the iced coffee index.
Right.
Like what is the propensity to spend based on the sentiment of the iced coffee?
Right.
If it's like 30,000, 40,000, 50,000, where does that sit? And I think for me as a consumer, mine is also fairly low right now.
Right.
I think the confidence is okay, or sorry, the capacity is okay,
Or the
but
spending.
the confidence, the confidence right now is a little bit questionable given things that are going on. But I think medium to long term, still somewhat optimistic. In terms of
very optimistic. I mean, we're talking about wiggles here.
Yeah.
To be really clear, when I'm saying that the confidence is kind of hitting the spending a little bit, we're still talking about spending consumption growth of like 7% or something like that. Even in this fast growing area of Asia, that's still like a really big number. I do want to loop back to something you just mentioned, which is is a segue to a really interesting point. Since you mentioned kind of buying at the corner side coffee type place, right? So the two things that I mentioned so far that are dampening sentiment, the interest rates and then the inflation spike, but also the government is widening the tax net for small businesses, like exactly the type that you mentioned. Ultimately, we think this will be good for the country. If you look at, for example, what happened in India after the demonetization back in 2015, it was ultimately good for the stock market, good for the economy. But in the short term, because there's a lot of small businesses that have to pay tax now that didn't before, that were kind of outside the formal economy, and they're being brought into the formal economy. It's a very good thing for the country, but it's also makes people feel not happy in the short term.
Yeah, it adds cost to the businesses too that previously didn't exist.
Yeah, exactly.
And so as a result, how are they going to adapt? They're going to move it on to consumer pricing, right?
And actually, since we're talking about the stock market today, there's another phenomenon in that, which is that the big chains like Mobile World or P&J or now that there's this kind of leveling of the playing field going on, that will boost the revenues of the bigger chains because they won't, if you don't have an incentive to go to the mom and pop because the price is low because they weren't paying tax before, basically, that will benefit the revenues of the big consumer companies in Vietnam.
You mentioned that capacity hasn't changed, but interest in other investment assets have. What are those assets exactly? Because the two that stand out to me are like gold / diamonds and then term deposits.
Let's not get into the diamond topic.
Oh no, okay.
Too controversial. No, I'm kind of half joking.
So I guess the two.
And also, in general, Vietnamese do protect. I mean, diamond is more like a thing that you as a decorative, and gold really is. When they buy jewelry here, first of all, P&J, as you know, commits to buy back the gold. So it's kind of a semi-investment type thing.
Got it. So going back to my question though, real estate. Sorry, the two that stand out to me is real estate, gold,
right.
So are those two seeing an elevated interest?
This is a really great question. If you look at Vietnam, so I've been here almost 20 years, and traditionally, people would think about for their savings, real estate and gold, and you would think about they would tend to think about the stock market as kind of a quick money place to do, like take out a margin loan and try to get some quick gains. A couple things to mention there. First of all, real estate prices in Vietnam have gone up tremendously over the last 2 years. Call it almost 50%, although now they're kind of rolling over, especially in Hanoi. I was just up there and I'm hearing stories of price drops of something like 25% or so after having had a huge run up,
Okay.
So that's one story about the real estate. And then about the gold, one indicator that I track very carefully is I look at the price of gold in Vietnam compared to the price of gold in the world. And right now, the difference is only about 5%. And that means that local savers, are not actually aggressively putting their money into gold. That's partly because gold price went up to sort of 5,500, then it kind of came down to 4,000. It seems to have bottomed there. And if there's only one single piece of advice that I can give people in this, podcast today, now is the time to buy gold, because I think it's about to go up. I mean, by the end of the year, I think the outlook for the stock market will be good next year, but I think I would just jump into gold right now. But so far people are not. So that doesn't explain why the stock market has been flat.
Got it. So if I was a gold, let's say, asset holder at the moment, am I selling or am I buying based on sentiment? Just hold, kind of ride it out kind of thing, hope that we hit back to closer towards the high that we had, or how do you see that?
Okay, so first of all, for full disclaimer, I worked in JP Morgan, First Boston, Lehman Brothers. If you work in those firms and you talk about gold, you're looked at as being kind of like a, cult member or something like that. Yeah. So let me say something as a blanket statement. I strongly believe that everyone should have about 10% of their net worth in gold, not really as an investment, but more as kind of like an insurance policy. And I'm talking about every country in the world, because governments have a tendency everywhere in the world to print money to solve their problems. So gold, owning a sliver in gold is kind of a permanent insurance against that. But right now, I think it's a particularly good time to buy gold, because if you look at what's going on, like with the US, there's a lot of money printing going on in the US. People who follow the news may know that about a week ago or so, the US government made an intervention with the Japanese yen. So the yen had been weakening, and the US Treasury said, okay, we're going to buy the yen, we're going to sell dollars, and we're going to buy the yen. So actually, if you really go all the way down the rabbit hole, when the US Treasury sold dollars and bought yen, the dollars that it sold in order to buy the yen were basically freshly printed dollars. So that's another way of like printing money. And I think we're in for a lot more printing. I don't like what's happening with all the war stuff, from a personal point of view. I think it's not good for the country. It's not good for the world. But whenever you have war, it's very inflationary. The governments typically will print more money to pay for the war. So there's a number of factors lining up together that make me think the price of gold will go up again by the end of this year, actually.
One thing that crossed my mind as we were speaking, Mike, is you were mentioning that FDI continues to flow into the economy, and that's great. We see huge blockbuster investments, like Samsung just announced a new initiative in Time Wing, I believe, for like 1.5 billion. That I think that headlines the sentiment at the moment, which is encouraging.
Actually, before you get to your question, let me just inject something.
Yeah.
If you look at the pipeline of projects that are kind of coming ahead, so we look at the actual flow every year, but we also look at like new registrations, new projects. That number is up 60%.
Okay.
This is incredible.
Year over year?
Year over year, for the first 7 months of the year.
Yeah.
And it equates to about 11% of GDP. This is like staggering. If you look at China, their FDI inflow has never really got much over sort of 4 or 5% of the GDP. We always look at as a percent of GDP.
Yeah.
So the numbers are staggering.
Yeah.
And cut you off for your.
No, that's a great stat to know. The stock market tells a different story, though.
Yeah.
So could you just further clarify like the differences between the two at the moment? Is that just because it's a different profile of investor as well? Like obviously putting in a 1.5 billion, that's like CapEx.
Yeah.
Whereas not retail investing, but stock market investing, that's like a click of a button. Right?
Yeah.
So could you clarify the positions of FDI companies and investors between those two at the moment?
Well, you actually said the right thing first, which is that most stock market investment in Vietnam is retail investment. So they tend to hop on, it's like a school of fish. They go on one thing and then they go on another thing.
Got it.
The disconnect comes from the fact that when FDI comes here, so they build a new factory, they hire a bunch of workers, these might be people that were previously working in a farm, so they go from the farm to the factory. So their incomes go up. That helps to support the GDP growth. But from an investment point of view, you can only get access to that phenomenon like indirectly. You know, like if you buy FRT, for example, the FPT's retail store. So they have the Long Chow pharmacy company, you know. So now someone who gets a new job in a factory, their income is higher, so they're able to afford. But this is you're like a few steps removed by the time that the FDI trickles into like a stock market investment. So the two are quite disconnected. The stock market, on the other hand, is really driven primarily by what's happening in the real estate market and in the banking sector. These are the two big sectors that kind of drive the picture of the stock market. And companies related to Vingroup, both Vingroup and Vinhomes, and it's got a family of companies there, account for like over 25% of the stock market. So what's happening with them in particular is particularly impactful for the stock market, for the VN index, basically.
Okay. Let's go back to retail investors in Vietnam. So you commented about the direction of gold. I think, thank you. I think people love to hear that and to just better understand an opinion about where they can put their money. What about real estate? So you mentioned an interesting point. A quarter of the Vietnam's GDP is manufacturing, but so is real estate.
It's a little bit lower than that,
but comparable.
But it's a big number, though.
Comparable. Do we see inflows going in that direction? Do we see a pickup of real estate construction happening? Inventory? Give us that macro picture as of August 2026.
You really ask good questions. This is really okay. So. It's a little bit of a long story, but it's a very interesting story. So I mentioned before that the price of properties had this huge surge, call it 50-ish% over the last 2 years or so. But actually, in a normal real estate bubble, what happens is the banks lend at a very accelerated pace, and they lend to real estate developers, and they build a lot more units. So you will tend to see like outstanding loans and the number of new real estate units kind of going up together. And then finally there's a crash and everything kind of reverses. And the banks that were lending a lot at the top of the market, they will often be left holding the bag. They'll have a lot of NPLs. But remember when we did our interview with Jens, the Techcombank CEO, he made a really good point. And it's not just for Techcombank, it's also applies to other banks, that as the real estate prices have been going up, actually construction activity has not also been going up in parallel. So the reason why prices have been going up is because there's not enough supply. We calculate it's easy to calculate sort of the number of new apartments every year. We can estimate like what the demand for new apartments is by looking at how many people get married every year, how many people move to the city. And just kind of a back of the envelope type calculation is that the number of new housing units that are getting produced in Vietnam every year is about half of what the demand is. So that's why the price has been squeezed up. So honestly, I think if for a young couple, for example, if you're gonna need to live someplace someday and you want to have kids and all that kind of stuff, yes, absolutely get on the property ladder now. I don't see property prices going up very much more from where they are now. So if you're not in a position that you kind of want to buy as a real, genuine, homeowner, you can wait a couple years, I think.
Okay.
Yeah, and put your money in the VinaCapital funds while you're waiting. Put a plug in for my.
I came across a pretty interesting statistic that they noted that Ho Chi Minh City and Hanoi are actually top 5. I think the top countries in the world, cities, as a percentage relative to someone's income, the most expensive real estate in the world.
Yeah.
So the question is, you're mentioning real estate will go up. That's great.
Right.
But how does it move in relation to income? Our income's going to rise.
Right. Okay.
Relative.
So I've seen those as well. We have to be a little bit careful when we look at statistics. There was a very famous book when I was a kid called How to Lie with Statistics. I'm not saying this is a lie, but sometimes. And there's another idea which is called from a Stanford professor called the flaw of the averages. So you have to be careful when you take averages. Part of the reason for what you're just mentioning is that there's been a good amount of development at the very high end. And so this is basically for foreign buyers from a certain country that now less, the VQ, when they want to buy, when they want to invest here, they'll typically buy like very high end. And when I say very high end, I'm talking about $5,000, $6,000 a square meter type.
So it distorts
the average. Yeah. If you look at the sweet spot for the mid tier, and I'm talking about companies like Namlong, Kangen House, a few others in that bracket, they're kind of focused at around the sort of 2,200, 2,500 a square meter type level. And that will typically be new homes, new apartments that are being constructed, maybe in Gavak district, sort of 30, 40 minutes from here. So we do have to be careful, look in the segments within the,
Well, there has been commentary about the incentives for developers across those segments. I don't have any numbers on me. I think maybe you have a little bit more information on that, but like the high end segment is where all the money is made, quote unquote. Now it's you could say it's almost like no risk at all for these developers because the inventory is so tight and the demand even the purchase type of purchaser, there's enough of them to warrant it.
Right.
And they're taking up a lot of these really valuable real estate.
Yes, that's right.
Like
the golden plots.
Yeah, exactly. And then you talk about these mid-range ones. And yes, I know about those as well. And they build great stuff. But then there's like nothing on the low end, quote unquote. Like accessible first-time buyer.
Right.
That's making this like sentiment for young people like it's impossible, right? What are your thoughts about the splits between those segments?
The government is just recently starting to address this issue. In Singapore, it's like a very high percentage of the population lives in the HDB, which is essentially public housing.
Right.
And I think they're looking at that and thinking for the entry level for true homeowners, a couple wants to live there, raise a kid. I think they're paying attention to that. But you raise a really interesting point, which I can give a little bit more nuanced understanding of. When a real estate developer builds a new apartment block, for example, they have to buy the land and all that kind of stuff. Typically, they will have bought the land years ago, and the land will have already appreciated.
Okay.
So even if they were to sell it as a mid-level type, apartment block, they have those gains already. But the gross profit margin, so that's excluding the increase in the land price since the time that they bought the raw plot of land, the gross margin on a really high-end development is like 60%. And the gross margin on for Namlong or companies like that is kind of like 20, it's more like 20-ish, 15, 20% gross margin. So their incentive is to do like the more luxury, in the hope that they can sell it to overseas buyers and this kind of stuff.
So I do want to talk more about long tail real estate investing. So it's not emergency podcast, but more kind of like thinking about the future. We see all these news about the metro lines, this high speed rail initiative, which is a couple decades away probably, but exciting nonetheless. And I was reading a documentary about how this compared Vietnam's situation to Japan's.
Yeah, of course, the transit-oriented development.
Yeah, kind of like these mega hubs, right? So like if you look at Tokyo is so big, and then it connects these like other cities around it. Yokohama is like the perfect example of that, where you can reach from Yokohama to Tokyo mid city center less than 30 minutes, like end to end. And so that created this situation where real estate investing became appealing in these like cities surrounding Tokyo.
Satellite cities.
Cities. So in Ho Chi Minh's case, or even Hanoi for that matter, is that going to be something to be on the lookout for? Metro is obviously very an ascent kind of at the moment. Is that a consideration?
You do hear people talking more about the TOD, transit-oriented development. It would be great for the country if that kind of unfolds. I think right now it's more of an ambition than a reality
or something you can plan for.
The Japanese case is quite interesting because you had these companies like Seibu or Tokyu, and they were like, they developed a railway. They had their own like luxury department stores, along the way. They developed the townships, all the way out there. And so far, we don't really have an equivalent of that here.
We do have Binzil New City, which is developed by Tokyo.
Yeah, because they had the experience in doing this. And so that would be the first kind of concrete example.
Do you see that place being exciting for real estate investment?
Absolutely.
Okay.
Absolutely, yeah.
Yeah, not paid for by Tokyo.
But keeping in mind that the price has gone up a lot.
It already has
in the last 2-3 years. Okay. So you've got time to get in. You don't need to go, go quickly. Yeah.
Okay. Thanks, Mike. Great insights today. I want to touch upon the economy now. So 8% GDP growth, amazing, great. Let's dig into
even above.
Or even
8%,
above.
Yeah.
Let's dig into those details a little bit. What's actually driving that growth, and what's also dragging down that growth? So 2-part question. Let's start with the positives. What's really driving that 8%? And then the second half, what's dragging that down?
2 drivers this year. First of all, Vietnam is we've talked about FDI a few times. All of this accumulated FDI is translating into, frankly speaking, incredible export growth. Vietnam's exports of computers, electronics, these kind of high-tech type products is up 50% this year.
Wow.
And that's after a 50% increase last year. So it's not like a small base, it's a huge increase. That having been said, Vietnam has an enormous 7% of GDP trade deficit. Despite that, we'll come back to that provocative statement. So that's a big driver. The infrastructure development, particularly in the north, in Hanoi, has been amazing this year. Last year, spending on infrastructure reached about 7% of GDP, and that's comparable to China and the Philippines at their sort of peak levels. The point to make there is that it's very elevated. Construction spending in Vietnam is growing at like almost a 10% pace, which is like really solid number, but it's having a hard time to accelerate further. The government wants to pump it up even more, and they're running into some bottlenecks there. And then the last thing to mention is that the consumer sentiment in Vietnam is quite weak. It's not having an overly negative impact on the actual spending. The spending is kind of bumping along at about a 7% pace. But here too, it's hard for that number to accelerate when people are not really feeling happy, basically. So those are the 3 kind of main factors.
Okay, and what's dragging down that, if any?
Yeah.
I'm sure there's some movements in the stock market or just in the economy in general.
I gave you 2 openings there. One is about the trade deficit, and the other is about the infrastructure. We'll go into those 2. Yeah.
Okay. Let's just do that instead.
7% trade deficit.
Trade deficit.
Yeah.
That's a surprising word because I don't think Vietnam has ever had one, historically speaking.
Not since 2008 when I first came here.
Not since 2008.
Yeah.
So what's driving that trade deficit?
Sorry, to be clear, I mean, we've had modest deficits here and there, but this is the highest.
Okay.
So the previous record was in 2008, and now we're having again a record trade deficit.
So the record trade deficit, what's driving that 7%?
Shocking, because I just mentioned we're having huge, export growth for high tech products. There's a couple things here. You and I started this series by talking about the war, and I think we've moved on and kind of almost forgot about all that. But the war actually is, it's pushed up the oil prices. The war has also pushed up the value of the Chinese yuan, and so that's a little quirky type development. Vietnam imports a lot from China. So if you look at that 7% figure, anything worse than 3% of GDP is considered like a danger level, particularly for the currency, although the currency is not moving. I'm sure we'll come back to that.
Yep.
But out of that 7% number, around 3 percentage points basically could be attributed to the war. Here's something interesting. Around 2 percentage points of Vietnam's trade deficit is because RAM memory prices have doubled.
Wow.
Every country that produces high-tech products, Vietnam, Malaysia, even Thailand, certainly China, we're all suffering from the same thing, which is that RAM prices, because of this AI boom, have just exploded, and that's about 2 percentage points. And then the rest is like the FDI companies here, they're aggressively importing their materials to make, they're looking at their order book and they're saying we have orders coming up. Also, it's a bit of a subtle point, but in the past, and this is actually good news for Vietnam, in the past, what the FDI companies did is they imported the components that would go into making something like your iPad there, but they would not really make the juicy parts inside. They would import them. And what they're doing right now is they're importing machinery to make the things that are inside of these high-tech products. So when you import the components, you can turn that around into a finished product, and export it like within 6 months. But if you import a machine that you can then use to make things that go inside the iPhone or the tablet or whatever, the turnaround time is longer. So this is another reason why we have this big trade.
And how long is that turnaround time to start manufacturing in-house components like RAM?
Well, to be clear, you start making it right away, but because the price of the machine is so much higher, the payback on if you import RAM and then you can start putting you can sell your iPad within like 6 months, but if you import the machine and you get your money back for the component, but if you import a machine, the payback's like 3 years, 4 years, something like that.
Okay.
Yeah.
So I guess the huge gains that you would see, at least amortized, would be a few years.
Fancy word.
Yeah.
No, you're right. This is exactly amortization.
Yeah. Okay.
Yeah.
And I want to talk about the RAM thing because I want to kind of make it more layman's terms, I guess you can say. When you say RAM going into the iPhone, it's the computer chips.
Yeah, it's the computer
chip.
The memory chip.
Memory chip that makes, when you buy an iPhone, it's like 512 GB or something like that, and you want to buy 1 terabyte.
Yeah.
Well, guess what? That's going to cost a lot.
And typically, out of the final selling price, something like 15%-ish will be the price of the RAM that goes into it.
15% of the input.
Yeah.
Okay. And that's doubled.
Yeah, and that's doubled.
Okay.
Yeah. So it also means that. So I mentioned we have the 7% of GDP trade deficit, which is it's an alarming. At first look, it's kind of an alarmingly large number, but if you imagine that, okay, the price of the RAM went up a lot, blah blah blah. So finally, someday when you make a product and you sell the final iPhone, the price of that's going to go up as well. So we'll recoup some of that later.
Got it. One other thing you didn't mention about the trade deficit was Vietnam importing its energy.
Yeah.
Is that also a driving force behind this trade deficit?
Yeah, that was the point I made earlier.
Yep.
I couched it in terms of the war.
Yeah.
So I said the war is worth about 3 percentage points, and I'm including the price of energy.
Okay, and more specifically, where is that energy coming from? Because we touched upon how in the past we mentioned about the U.S. having LNG exports. I have no idea if that's happening.
Right.
Is that happening?
Not yet.
Not yet. So where is energy coming from that's driving up those prices?
Wow, that's also a very great question. Remember that in one of our earlier of this series, the Emergency podcast, if you go back, by the way, good point. Today, I don't have any mea culpa to correct. The first few ones we did, first I said like the war is going to be a big deal. And then we found out that the war was not actually that big of a deal. And remember that the reason why the war was not that big of a deal was because Vietnam was able to source both crude oil and also finished products like diesel and gasoline or petrol.
Yeah.
Really interesting point is now we know that a good amount of those, particularly the finished products, gasoline, diesel, et cetera, came from places like Korea and Japan. Like they don't have extra, to spare. I was in Japan 2 weeks ago, and there's a little bit of a famous like local type story that one of the potato chips, they tried to print it with just black and white only because they didn't have enough chemicals, So they actually had, at least in some small way, like some direct impacts of the war, not having enough chemical, to print this thing in one particular brand. But again, we didn't have any impact here. And part of the reason why is because we source so much energy from those countries, China, Korea, Japan. China's less surprising because they had huge reserves. But in the case of Japan and Korea, it really shows that how much interest they have to make Vietnam's economy can keep functioning.
So someone in Japan and Tokyo and Seoul are probably figuring out, doing the math, being like, hey, if we don't do this,
we've got so many factories.
It's a domino effect. The economies of our countries are also going to suffer.
Yes.
Okay.
And in fact, when I was in Japan a couple weeks ago, people were really talking about that topic. They were asking me, what's going on in Vietnam? Because, some of your inputs for the things we make are from Vietnam now.
Okay. Vietnam very much is that connected economy.
Yeah.
Don't forget that, guys, because we play an important role in the global economy. So in summary, Mike, what do you expect for the stock market in Vietnam for the rest of the year, and then also looking into 2027?
Okay, so the valuation of the stock market I mentioned at the very beginning is very low right now. It's almost like crisis level type valuations. What investors look at, and I hope that retail investors should start looking at this type of figure as well, is the PE ratio, the price divided by the earnings. The PE ratio in Vietnam is around 11 to 12 now, which is very low. And the other thing that they should look at is how quickly are earnings growing. In the first half of this year, earnings of the VN Index companies grew about 50%. This, or almost. This is an incredibly large number. And the other thing that is popular to look at, there's something called the PEG ratio. This is Peter Lynch, who is kind of a very famous investor. You look at the PE ratio, and then you divide by the earnings growth, and anything below 1 is like very attractive. So it's kind of a long way of saying, you know, the market is very attractive right now. That having been said, I think this high interest rate situation is going to persist for the rest of the year. The banks have lent out a lot of money, very aggressive in their lending, but they haven't been able to collect enough deposits. There's something that's called the loan to deposit ratio. It's around 110 right now. I mean, the State Bank of Vietnam has literally within the last few days been talking about this topic. They call it a funding gap in the banks, you know, that they need to have sufficiently high deposits to attract money. That means taking money out of the stock market, by the way. So those two factors will likely continue weighing on the stock market for the rest of the year. For a variety of reasons, we could have a whole nother podcast about that. I think the situation for the stock market will look much better next year. So it's like you buy gold now because it will go up by the end of the year, and start selectively putting your money in VinaCapital, you know, open-ended funds, or picking the stocks that you think will benefit, you know, from the economy's long term. And I would expect the stock market to have a good run in the beginning of next year.
Okay.
Yeah.
We're toward the end of today's program, guys. So I just want to remind you that if you find these emergency podcasts somehow useful for you, interesting, you know, don't forget to share to your friends. But actually let us know in the comments below, because we need to know from you guys, should we be doing more of these? How often should we be doing them? I think we've only done 3 or 4, so over 6 months. So if you want to hear more,
also
let
like
us know.
the topic that people like. The motivation for today's podcast is I think both of us were getting a lot of questions from our friends about gold and about the stock market. Those are the two things that I hear the most about now.
Exactly.
You know?
So if there's any particular topics you want to hear about, also let us know in the comments below. That'd be super helpful to let us know what to produce. Mike, thank you for coming in for another program. I think you were just here a few days ago recording another one. So it's always a pleasure to have you as a guest.
This is becoming the highlight of my week.
Oh, is it really? Okay. Yeah, we needed to tell Don and your team over at VinaCapital, hey, you know, we need to do more of these programs. So thank you so much, Mike. Always a pleasure, and hope to have you back on the program.
Thank you so much for having me. It's my honor to be here with you.
Awesome. That was another emergency podcast, a special series within Vietnam Innovators with Mike Kokalari. See you guys next time. Bye-bye.